Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of recently closed trade ID number 518. This was on stock symbol CI, which is Cigna in the healthcare sector, which I felt from a fundamental standpoint is a good sector to be in for the year of 2022. This was in our impulse or directional strategy. You can see it was a long call. The entry alert was sent out on December 23rd, and there's a lot of interesting things to talk about regarding this trade. From an Elliott wave perspective, you can see the wave 5 have ended to the downside, and when a wave 5 impulse pattern ends, if the wave 5 hasn't extended more than 100%, the expected move is a retracement back to the previous 4. Well, in this case, Cigna had already done that. Well, when that happens, you're like, okay, the pattern ended, the retracements occurred. Now what? Now we look for Elliott wave to give us some signals for the next pattern. But in the meantime, you can also take a look at what else is going on. Note that there was a gap that occurred back in August that hadn't been filled yet. So we deferred to our favorite confirming indicator, the DMI. We have several in our technical trading system that backs up or supports Elliott wave, but my favorite one is the DMI. And we look at that to see, is there support from the confirming indicator, the DMI, for the stock to continue to move higher and likely fill that gap. And in this case, you can see the ADX was turning up. It was between the two directional indicators. The ADX was above 20. Good separation between the two directional indicators, all the things that you look for out of a supportive DMI. So that's why the decision was to send out the directional alert, upside alert on CI in the form of a call option. So when we take a look at the closing alert, you can see that everything happened exactly as planned. The DMI showed that we were likely to continue to move higher. We did. We moved up and filled the gap. That was the plan for this trade. You want to always follow your trading plan. On top of that, we had gone so quickly to the upside to fill that gap that we were slightly overbought short term, which makes this a good point to go ahead and exit the position. So we generated just under a 28% return in just 4 days. And I think we'll take that pretty much every time. So a good example here of Elliott wave, confirming indicators, filling gaps, lots of cool things to talk about in this alert that we follow at Elliott Wave Options. I hope you found this informative, and I look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.